Welcome to Real Estate Live, where your questions get answered. I'm your host, Andrew Finney, with King Realty Group in Las Vegas, Nevada. Today's hot topic is, what is the CARES Act, and do you still have to make mortgage payments? We're going to get real with that with Bill Merren, who is a loan officer here with New American Funding, and he's going to tell what he knows about that, along with any of the lending guidelines that are starting to shape up. We're also going to have a special guest today, being Kim Cunliffe with the Wilson Group in Nashville, Tennessee. For reference, we are streaming live on YouTube and Facebook. To ask a question, please use the chat box, and please give us a thumbs up and subscribe if you're not already. I'll be going live 9 a.m. Pacific Standard Time on Mondays, Wednesdays, and Fridays every week. If you'd like to join us on screen and share what's on your mind, please feel free to use the link in the description below. So without further ado, let's go ahead and get Bill and Kim on screen with us. Oh, we have Kim and Bill. Are you with us, Bill?
What's going on, Andrew?
Hey, Andrew. Thanks for having me on.
Hey, good morning. Thanks for joining in. So, Kim, you're in Nashville, Tennessee. Tell us how that's working out over there. I mean, it's kind of midday-ish over there right now. Is it a beautiful day?
Yes, it's been beautiful lately. It's been quite a march, starting off with the tornado and now the global pandemic that we're experiencing. But other than that, the weather's been really swell.
Well, that's good. So with the recovery from the tornado, I know that you and I had that conversation a little bit last week. I thought it was pretty interesting that you were telling me how tight-knit Nashville is and how you guys come together in times of need. So when you're talking about the coronavirus and the pandemic, you're like, hey, well, we're already a pretty tight-knit community. It's just a little bit different now how we respond to natural disasters. But I got the distinct impression that Nashville residents take care of their own. Would you say that's right?
Absolutely, yes. And that has been the silver lining for sure, with everybody coming to help those in need and really band together to help each other out. It's been really nice to see. And so now we're just continuing those efforts and really trying to do our best at doing the social distancing, which seems to be a challenge for some of us.
Mm-hmm. And that makes a lot of sense. And I certainly appreciate you sharing that with us. It really is. We have an opportunity during this pandemic, in my opinion, to actually come together. We have that opportunity. So without further ado, I do want to get into today's hot topic. Bill, you're here in Las Vegas with us. I see you're out of the home office, and thank you for joining in. How's everything with you and your family right now?
Yes, sir. Everything's good, man. Just navigating that day-to-day of homeschool and kids and all the fun stuff. It's just a blessing in disguise, man.
Yeah, it really helps us focus in on what's truly important in life. That's for sure. So, Bill, I mean, there's a lot of stuff that's going on right now with the Senate recently passing. It looked like on March 23rd. It's actually a Senate Bill 3548. Now, A lot of people say, what is a Senate Bill 3548, Andrew? Well, it's what is euphemistically being called now as an acronym, the CARES Act. And what CARES Act is, what it stands for, is the Coronavirus Aid, Relief, and Economic Security Act. Now, there's a lot of stuff going on inside. Now, as it pertains to mortgages and real estate, do you, as far as what you're seeing thus far, to be a little bit more helpful, try to pop it on the screen here of something I found so everybody can see it. This content, the link down below, if you're watching, just let me know and I'll make it available, because I found this on Investopedia with the key takeaways to how this works. So, Bill, please share what you're hearing on the lending side. I know it's new, but tell us what you're hearing so far shape up and what people need to know about this.
So that, Andrew, you hit the nail on the head. It is very new. This actually just recently got passed, like you had mentioned. What we're seeing on our end is, and what we're being told is, every mortgage company is going to be different with the way that they are going to respond and how they're going to go about it, because the mortgage lenders are still responsible for, whoever's servicing the loan is still responsible for those actual mortgages and the payments being made. So it's very important for every homeowner to understand that, if you have that mortgage, if you have the financial hardship, don't just automatically assume because this was passed that you're going to be covered, that you're going to be able to skip 2 payments, 3 payments, whatever that is, because even though this passed, there still is additional guidelines and things, and there still is things that you're your mortgage servicer might require in order to do whatever it is that they're going to do, whether they're going to allow you to skip some payments and add to the back of the loan, or whether they're going to have you miss a couple payments and then make that big lump sum payment, which we talked about last week. So again, it is still very new, but it is a very positive move in the right direction, I believe, for people that really truly do need help. So if you are in that situation, if you are in that financial hardship, please pick up the phone and call your mortgage lender, your mortgage servicer, whatever phone number is on your mortgage statements that you get. So again, just keep following up and checking in with us on this topic, because it's an ever evolving situation.
And that's really good information, and I appreciate that, because one of the things that was a key takeaway when I was reading this is the fact that they are talking about right now. It looks like this impacts the federally insured loans more than like a conventional loan. Is that the same thing that you're hearing, or?
Yes, it does. It's actually causing most lenders out there to tighten up on their VA and FHA guidelines big time. Meaning, what that means is they're increasing the credit score minimum requirements. They're not going down below like a 620, 640. Some lenders are even requiring as high as a 680 to qualify. But every lender is not the same, so just understand that. But the guidelines are definitely have tightened up a little bit.
Okay, that's good to know. So with the guidelines, I know that's something that we were planning on talking about on Wednesday's live stream, exactly how they're tightening up.
Yep.
And if you're watching right now, please do tune back in on Wednesday when Bill starts breaking it down for us, how lending is getting a little bit tighter and what to expect moving forward. Well, there's a couple of more things I want to pick out on today's hot topic, being this CARES Act, specifically the word forbearance. The word forbearance does not mean forgiveness. So even if you are in a position that when the guidelines come out in the lending world to apply for this program and get this assistance, please understand you're going to be needing to pay the money back. It's just a question of how it's going to get paid back. Is it getting essentially tacked onto like the backside of the loan, or is it going to be a situation that it might balloon on you at the end of the day, which would be very unhelpful to most of us. So Bill, I mean, have you heard any like word on the street or lending talk of just even random thoughts about how this might come to be?
Yeah, so we have heard, again, this is just going to be different per different lender, but basically what we've heard is conventional, meaning Fannie Mae, Freddie Mac, have offered potential forbearance on these mortgages up to an extended period of time. And those are conventional loans. When you did not do FHA, when you did not do VA, typically you probably have a conventional loan, Fannie Mae or Freddie Mac. So those are the ones, Andrew, that we're seeing a very positive move in the right direction of being able to have forbearance. The challenge right now is your FHA and your VA buyers, which I know you and I have a lot of. So, but regardless of whatever situation they're in, they need to make sure that they're contacting their mortgage servicer.
Okay, great. And
oh, I'm
go
sorry.
ahead.
I didn't mean to cut you off, but I was just thinking of the word forbearance is very reminds me of, student loans. That has been an option on student loans. Typically, I mean, everybody's going to have their own set of guidelines and rules, but I know from having had to do that in the past when I was younger, that the interest still accrued, but would they just tack on to the back of the loan?
That's the idea for sure. But again, it's so new, we don't really know, but that is the idea that will happen. They're not going to skip payments completely. It's going to be added to the back of the loan, and the interest is going to absolutely accrue over whatever that time frame is, whether it's 2 months, 3 months, 12 months, whatever it is, that interest will continue to go up. So that loan balance will get bigger for sure.
Right.
Okay, so I see that we have some comments coming in. Thank you, everyone that's joining us live right now. Miss Karen Hollywood, this is someone that both Kim and I both know. This is a really wonderful lady that is one of my YouTube subscribers that makes some wonderful comments, and absolutely terrific lady. So I do want to, she says, so excited to see y'all tomorrow with morning coffee. Well, here's the deal. She actually made that comment the moment she saw that this was going to go live. And she's like, oh, I got to hit this up. So Karen, I just want to say thank you. Hope you're here with us. And if not, then you can catch it after the fact. If you're just joining us now, today's hot topic is about the CARES Act and also answering the questions that you have on your mind. So without further ado, let's move into the questions we're getting coming in. Thank you, everybody, for joining us again and for the wonderful questions. Rafael Flores says, good morning, guys. I locked in my rate at a 3.625% VA 30-year fixed. Should I have waited? I only have 14 days until I close. Phil, you're the lone Oscar screen, my friend.
So good question, Rafael. So yeah, it sounds like you are doing a purchase because you got 14 days to close. Absolutely, it was a correct decision to lock your loan, 100%, because it's a great time to buy. Prices are still good. That rate is great. That's a great interest rate. You should not have waited. A good decision to do that, because there is a possibility, all the rates are, good, there could be a upward tick and you might not qualify if you miss that. So good job, good decision locking that rate. But yes, if you are in contract to close on a home, Andrew, like I was telling you before, man, is just make sure if you can qualify with the rate where they currently are in your contract to close on a home, lock it.
All right, that's good. That's good information. So, Rafael, it sounds like you're getting it right from Bill saying, hey, that was a smart move. Good stuff right there. Drew's enthused. Hey, Drew, I am super glad that you were able to catch us here too. So Drew says, hi, everyone. Thanks for your time. So what Kim and Bill may not know is that I've been watching his comments coming in on the channel. So I'm super excited you were able to join us, Drew. Thanks for being here, my friend. Queenie X is saying, is this a good time to buy a house or not? I'm confused. Kim, let's give you some screen time here and let you lead the charge on this question.
Yeah, no, it's an excellent question. It's on the top of a lot of people's minds. Most of the buyers and my clients that I've been working with trying to find a home, they have pushed forward saying that for them, it is a good time. The interest rates are low. With Nashville being a little bit different with the tornado that came through, but aside from that, with the pandemic, we went from having multiple offers on something that is reasonably priced, something that is priced right for the market, for its location and condition. We've seen anywhere from 2 to 3, sometimes 4 offers. So now it's kind of a leveling of the playing field, if you will, where there are not as many offers, but certainly listings are still showing, buyers are still out there. They are taking precautions, and I advise that you do such as well. Take gloves with you, disposable gloves. At my listings, I make sure that gloves are on the front porch, so when they're touching that lockbox, they have something, to protect them from getting any germs, that there's hand sanitizer. Try to keep all the lights and the doors open, so minimizing just any contact if there were to be, germs of that nature in the house. So yes, I think that it is a good time to buy, especially in our market. And I mean, nationwide, really, because these interest rates are still pretty dang low, wouldn't you say?
Definitely. Yeah, they're really good.
So Kim, thank you so much for that. There's a lot of different things that come to mind on this for me. I'm getting ready and I've been scripting out a video that I'm going to make about how to buy a house during a pandemic. And one part of it is, look, we're streaming live right now across 2 social media platforms. This is the power of technology. A lot of people use Facebook, and it's very easy for me as somebody that uses video a lot to say, hey, you know what? Why not do a video virtual tour of the property? Bill, as you know, over the past several years, I've helped people be able to buy homes that were out of state or out of country using a Facebook Messenger video. Wow. So if there's a concern from a seller, I mean, we got to address the concern and be real about this. So the seller could say, hey, I still do want to sell my house, but I want to do so safely. How can I do that? And, that's a perfect question. So one thing that comes to mind is, why not limit the amount of showings or the way that you show the property down to a real estate agent that can do a virtual tour on the property? And if anybody's here in Las Vegas, whether it's my listing or not, hey, give me a call. I'll go over there and film a video, put it out on YouTube and my Facebook profile, and try to help you find the buyer for that property. That way everybody is safe. And it's something I enjoy making videos anyway. So why the heck not, right? But going back to those families, every one of them that purchased the property essentially sight unseen, which I thought was kind of funny considering it was in a video. But that said, technically a sight unseen purchase. They told me at the end of the day, hey, Andrew, this is actually just like what it looked like in the video, because I took the time to actually walk the house, answer the questions the same way that I would as though they were with me. And more importantly, perhaps even, is then to drive the neighborhood and the surrounding area so they had a better visual of what that means. So when you're talking about buying or selling a house during the pandemic, let's use technology. Let's be smart. Of course, we want to wash our hands. This stuff goes without saying. We all want to take and get clean, right? And we all want to protect each other. It's an opportunity to come together here. But let's be smart about what we do and not let fear guide our decisions from an emotional standpoint. And let's use our brain. That's why we were gifted with such a magnificent brain in our head. Let's come together and let's use that thing. So that's my 2 cents on that. Let's see what else we got. Let's see, Mr.
Okay, go ahead.
I'm sorry.
Well, I was going to just add one thing that I didn't cover to that question, which is it may not be the right time for you to buy, though. I mean, just financially, you have to look. That's a personal decision. So you really have to look at your finances, look at your job security. And, if your job is secure, then yes, as usual, what we say is get with a lender, call somebody like Bill and, fill out an application and see what those numbers look like. See if that's something that will fit your budget.
That's a great point. Ultimately, the best time to buy or sell a home is for the reasons that are important to somebody in their life for that exact moment in time. The market's going to go up, it's going to go down, it's going to go all around. What doesn't change is where we're at in our life. But one thing that you just said, Kim, that I believe is critically important to double down on, and I'm sure that Bill would affirm this as well, is it's all about job security. And if you have the job security, look, we want to make sure that you're taken care of. The last thing I think Kim or myself definitely would hate to do is to sell a house to somebody that they end up losing their job and then they end up going into foreclosure or a situation like that, and it causes an undue hardship. Contrary to the popular belief, a lot of real estate agents across these United States are top-notch professional people that care about the families that they represent. And we don't want to see you get hurt. It's not about a commission. It's not about a dollar. It's about you, the family, and the person buying. And we want to see you healthy and happy. So Kim, thank you a lot for bringing up the job security. That was a very important thing. And it's also part of the fun to have the three of us on camera together to talk aloud here.
Yes, it's fun.
So Mr. Silver, I popped you up, but now let's go ahead and pop you back up. Mr. Silver says, hey, hope all is well. Will the housing market crash in the next 6 months due to a lack of mortgage payments or foreclosures? Now, Bill, this is something I hit in my housing markets 2020 predictions, but I'd like to get your take on it now we're in the midst of a pandemic to see where your thoughts are at moving forward.
Yeah, that's a really good question. I know a lot of people are kind of hearing that kind of being stoked in the news and all that kind of stuff, the fear-based kind of logic. And I want you to understand too, what's really going on, what's different this time is last week alone, the current administration basically started a process of buying mortgage-backed securities. There was every day last week, there was at least $30 billion, 30 billion, not million, but $30 billion of mortgage-backed securities being purchased by the government, right? They were infusing the market with 30 to 40 billion dollars. Ended the week at 40 billion on Friday, which is just unheard of. It's really, really a good thing to help stabilize that mortgage, the mortgage side of this business. Monday today we started off a little slow, but it's only 9:18 Pacific time, so there is a lot of stabilization going on that currently is really helping things out. We have the experience of dealing with the last crash of 2008, so we're hedging on different areas to not make the same mistake again. There's a lot of things that could happen, there's a lot of things that will happen, but as far as it being the mortgage meltdown, the real estate meltdown, we're not the ones that caused this. We're not the procuring cause of like we were last time with the mortgage industry and with the real estate industry. Kind of in my opinion, I weathered that storm, I went through it being very freaking irresponsible, and that's not the case this time. We're being responsible, we're lending responsibly, we're making sure people qualify, but also there's a lot of, like I said, a lot of mortgage-backed securities being purchased to stabilize that market. So very, very good situation right now with what's going on.
And I'm glad that you brought that up, because when you compare things to like the 2008, and meanwhile, let me just give full disclosure again, I was still active duty back in the day, right? In 2008 when that was going down. But one thing that I've definitely been spinning up on with all of my real estate education over the last almost 7 years here is exactly what caused everything and what was going on back then compared to now, and the stability and economic measures that were put into place thereafter. One of the things to remember, I think, about the 2008 collapse and leading up to it is there was such an animal as what were called CISA and NINA loans, essentially stated income, stated assets. Hey, I'm a host over here at a Walmart, and I'm going to tell you I can buy $1 million house, and you're like, okay, how much do you earn? And you're like, $5 million. Okay.
Yeah.
And there you go. And then a no income and no asset loan. So we don't do
literally call them. Dude, they were literally called ninja loans. No income, no job on the application. It was freaking insane.
Wow.
It was insane. It was insane. And I think it's important to take stock when we're talking about the market collapsing. And to Mr. Silver's point and saying lack of mortgage payments and foreclosures. Well, we have SB 3548 that I was just mentioning on the onset, this CARES Act. Now, how this forbearance will be paid out is anyone's guess. And I think to Mr. Silver's point, it's going to depend a lot if that gets tacked onto the backside. So if there's any politicians or news people or whoever watching this, hey, let's put out some common sense and just say, tack it on to the backside of the loan, give a person the opportunity to pay it down over the life of the loan, so then they can go back to a normal term once they're caught back up. That's what would make sense. That's what keeps people in homes. That's what alleviates foreclosures, because the last thing that you want to do is kick people out of their homes. And then we have a really big problem. Just my humble opinion.
Yep. And Andrew, I did see something on Housing Wire, I believe it was over the weekend, to where individuals can actually pull out money from an IRA, some type of retirement account. Again, you want to confirm this with any CPA. I'm not a CPA. Don't give tax advice, but to where they can take that money out and use that towards buying a home. They can use that towards paying off debt. They can use that towards just having money and funds to live on. Typically, you are taxed on that money that you withdraw. You're taxed on those gains. You're taxed and penalized for taking money out early. But based on this that was passed last week, again, I haven't confirmed this for sure yet, but I did see it on Housing Wire that they will potentially be able to pay that back within 3 years and not be taxed on that, not be penalized on that. So that's huge. There's a lot of good that's going to come from that. You just got to kind of take out some of that fear, look at it with the positive, and look at the facts, because there is some good stuff coming. Yeah,
absolutely. So, Karen, I see that you mentioned good morning. Well, good morning, my dear. I'm glad that you're here with us. Queenie said, thanks for answering. Of course, Queenie, that's what we're live here to do. And please share it with your family and friends and let everybody know, hey, this is an ongoing thing. Monday, Wednesday, Fridays at 9 a.m. Pacific Standard Time. We'll be back talking about the hot topics going on and trying to keep up front of everything that's happening. Elijah Hunter. Let me go ahead and pop up Elijah. Elijah says, hello, Andrew. Thank you for making the viable broadcast. Elijah, thank you for joining in. I'm glad you're here. I recognize your name from the YouTube comments over the years, too. Thank you, my friend. I also recognize Mr. Darren Carter's name. I got that kind of memory. I don't know. Kim, you got that kind of memory? You see a person's name and you're like, I know their name. I know their name. So, Bill, it's kind of weird. I know there's over 18,000 people that are subscribed to my channel, but realistically, if I see your name in the comments, it's clicking in my head because I read every comment that comes in. There's thousands of comments and a lot of wonderful stuff in there, and I love reading the comments, and it's great. But Darren, good morning, Andrew and company. Maybe that's a suggestion. We need to retitle the broadcast, Darren. Right, it's a work in progress for a show. Greeting from Chicago. Well, you have greetings from Las Vegas and Nashville, my friend. Elijah. Back to Elijah. Elijah says, I researched volume of traffic transferred via Skype, Duo, Facebook Messenger, and other apps. The Facebook Messenger one. Elijah, I think you're trying to give me like a side note right there that going live on certain platforms may be better than others. If that's the case, then definitely hook it up. We want to grow and help people out and increase the amount of people that we can answer questions to. Matt, hopefully you're still with me. I saw you make your comment a few minutes ago. Such a pleasure making last Friday's broadcast with you, Matt. You are the man, and that was amazing. So back to Darren over here. Looks like a Bill question. Darren says, speaking of a mortgage and job security, to Miss Kim's point, I've been at Ford Motor Company for about 11 years. My wife and I bought our home a year ago this past November. You never know what might happen. Look what's going on now. Bill, what would you share about those thoughts?
I would just, again, it depends on your situation with your job. What do you do there? You've been there for 11 years. Are you in sales? Probably not. Do you work for, do you work for the corporate side? I mean, it really depends. If you're in sales, and yeah, it might be a tough time for maybe a month or two, but it just depends on that individual situation. And I would just urge everybody just to, just continue making your mortgage payments if you can. Don't be looking for just to skip a payment just because you can, but just continue making your mortgage payments. And if you truly have that financial thing that comes up, the financial hardship to where you're not able to make the payment, or maybe it would put you in a bad position, communicate that ahead of time to your lender. But yeah, I mean, it sounds like, Darren, you got good stuff going on.
Yeah, good stuff indeed. I mean, Darren was watching the channel, I think it was for almost a year and a half or so before he got ready to buy, getting prepared to buy. And it's one of the reasons that, look, I look back on my YouTube strategy and I think that I just took a shotgun approach to content. And I thought there's so much that people should know. Let me just grind away. And then looking back on it, I was thinking, well, maybe I could have learned how YouTube wants me to play and, all that fun stuff. But at this point, the content's there, and there's truly over 630 videos to help people. So, and Bill, you're in quite a few. Kim, we made one last year, first time home buyer pain points. That was fun.
That was fun. We'll have to do another one soon.
Well, next time you're in Vegas, or hey, we can stream like this and give it a whirl. I've never tried to make a video off of this format, but let's do it. Mark Baldone. Well, we know Mr. Baldone. I see you hitting us up on Facebook and YouTube. Mr. Baldone, I see you. We see you. Hello, my friend. I was thinking of you a moment ago when I was talking about buyers that bought a home while being out of the state through a video home tour. I'd love to have you back on in the video that I was just talking about that I want to make about how to buy a home during a pandemic and get your 2 cents on that and how it worked for you. So, Mark, awesome to hear from you, my friend. I hope you're enjoying a great day. Kathy Martinelli. Hi, Andrew. Why is refinance interest rate rising and will it fall? So, Kathy, thank you for being here. Bill, your turn.
So why is it rising? I guess it's compared to when, right? I mean, the rates are going up and down quite a bit. This morning, they were very, very good. There were some records set with the highs of the mortgage-backed securities market, which is really good for the interest rates. Now, what happened last week, like I said, where the government was coming in, stepping in and buying $30 to $40 billion a day, that stabilizes things. That does help the interest rates to come down. Now, typically, what's going on right now is you're going to see a lot of volatility in the mortgage market because they don't really understand what's going on as far as what's going to happen with the economy, specifically when this thing is done and past us, which it will be past us. But it is a very, very, very good time to get ready to lock in your loans for a refinance. What I mean by that is if you have not closed yet, if you're currently in a situation of maybe wanting to refinance, the idea is to get everything in, get your application done with your loan officer, get everything in, fully underwritten, approved, appraisals done if you need them, and be ready to literally lock, dock, and fund that loan when the time comes. I mean, my team and I, we do loans all over across the United States with one of our out-of-state lending teams. But it's a very good thing to get started now. So that way, if the market does drop even more, you're able to take advantage of it when it does. Again, a few weeks ago, the rates were really, really good. They did go up a little bit since then, but we are thinking they're going to come back down a good bit here shortly.
I'm wondering if he could expand a little because we hear about, the Fed, dropped the rate to 0. And I don't know, forgive me if you guys have already discussed this before on your show, Andrew, but I find it helpful for a lot of people who don't understand that doesn't mean that, that really doesn't affect the 30-year loan mortgage rates directly. That is more about the short-term loans,
yep,
like HELOCs and such.
Yep. Kim, awesome point. So the Fed's dropping the rate to 0 does not, you're 100% correct. It does not mean that your mortgage interest rates are going to be 0%. Oh my gosh, if it was, it'd just be insane, right? But
everybody, you wouldn't be able to sleep, Bill. I would be in first line too. Hey, I want a 0% interest rate.
Me too.
But it's a good thing, right? Because it is like you were saying, Kim. It's a short-term rate, which what banks lend to each other essentially for the home equity lines of credit and things like that. It does not directly affect mortgages whatsoever. It's a good thing. It does help the economy. It does help individual situations, but no, it does not affect mortgage rates.
Right.
Great questions. Great questions. Keith Shep, I did want to say thank you for your support, my friend. He says, everyone, hit the thumbs up button. Do it now. Hey, thanks, Keith. Greatly appreciate it. Yeah, thumbs up, right? Spread the word. Spread the word. Love it, Keith. Thank you so much for the positive mojo. Tommy 2. Let's get him up here. So Tommy says, hi guys, just a general question regarding home appraisals. Our buyer agent wanted to view the summary. What are some of the reasons our agent would like to look at those documents? Kim, your perspective before we get the bills.
Okay. Well, if they want to see the notes, if your agent and you're the buyer wants to see the notes on the appraisal, they want to make sure that it's a good appraisal in their opinion. I mean, because an appraisal is a professional opinion of value. You could literally have 3 different appraisals on the same day of the same house, and those would all be at different values. Now, hopefully they would be within 10 to 20% of each other, but you just never know what you're going to get. I had one of my listings that didn't appraise last week. It was $10,000 lower. However, we had a backup contract that was $10,000 higher than the purchase price. So we had a $20,000 differential. And when I was looking further into that appraisal, because we lost the contract due to that, but when I was looking further into the appraisal, I became very aware that it was kind of what we call a lazy appraisal, and that there wasn't enough value given to certain items and upgrades that my clients, the sellers, had done to the property. So these are all reasons, that appraisal has so many details on, it's not just bedrooms and baths and square footage. It goes into condition and quality ratings. And that has to do with, well, do you have 4 sides brick, or is it 3 sides vinyl and 1 side brick? That's quality. And, another quality rating is, do you have quartz countertop, or do you have Formica? Some appraisers give more value to quartz countertop than they do granite. And every appraiser is, like I said, different, because at the end of the day, it's an opinion, albeit a professional one.
Yep.
I could go on forever. You go ahead.
Yeah, well, that's all awesome stuff. And you covered everything I would have covered on that topic, because it is a straight up opinion. It's a very professional opinion. It's someone that's what they do for a living. But I mean, it is what it is. When if an agent wants to see the appraisal, I guess you got to kind of ask yourself why. Like you said, I mean, if the value came in low, absolutely, have them look at the appraisal. Now, if the appraisal comes in high, I wouldn't ever recommend, like Andrew, I've talked to you before about this, man, is just, if an appraisal comes in high, no, we're not sending that to any agent other than our buyer's agent, right? Because it's nobody else's business. The individual that pays for the appraisal and the mortgage lender is the one that owns the appraisal. If it comes in high, great. Show your buyer's agent so they can see the comps. Maybe they're working on something else. But when it comes to a listing coming in low, that's really the time you want your agent to see the appraisal for sure, to help negotiate that situation.
And thank you for both of your insight. One thing that comes to my mind, Tommy, on this is, I guess it would go back to what Bill and Kim both have already shared briefly on what's the value. Did it come in high? Did it come in low? Did it come in up value? Whenever I was first getting started in real estate, I kind of nerd out on this stuff, obviously. That's how I made so many videos. But speaking of that, is I would want to see the appraisal report so I understood how better the comp properties for my sellers. I wanted to see what appraisers were taking into consideration and see if I could identify and isolate trends and how much valuation was being provided to, we're in Las Vegas, so it's hot. So pools do have a value, but how much value? And doesn't matter how old it is, doesn't matter if the community is gated, the non-gated. And it was those kind of questions that nobody was really teaching me at the time. So early on, every time there was an appraiser going out to a property, I wanted to know everything that I could without ticking off the appraiser, the pick the brain to see what was going on. So I'd say, Bill, can I see a copy of an appraisal report to see what it looks like? And he's like, why would you want to see that? I was like, because I need to learn. And I would sit there and go over it, and over it. And I'd say, Bill, I don't understand what this means. And then Bill would educate me what it means from the lending perspective. But that's realistically one of the first reasons I, when I was just getting started, would like to see an appraisal. These days, to both Kim and Bill's point, is I normally am looking, if it's brought to my attention by Bill, it's normally because something didn't come in at value. Happens very rarely in the cases of the contracts that we work together with the buyers. Reason being is I always do a comparative market analysis prior to making the offer and submit the comps if the value is off. But in the cases of it being off, then we do normally try to rebut it in the buyer's best interest to help them. And I know that depending on where you are across the country, when you hear that, you'll be like, well, why would you as a buyer agent be trying to get it up to the value that was agreed upon in the contract? Aren't you just being a greedy, sleazy agent and trying to get a commission? No, that's not what that's about. What that's about is trying to protect the buyer, knowing that there's going to be 3 more ways of renegotiation with the seller. The seller could essentially reject it and say, nope, I'm done. I'm taking my ball called my house and going back to my place called home. Or the seller could say, yeah, you know what, I'll go ahead and drop it. That's best case situation number 1. They reduce to their appraised value. But what I've noticed in real estate practice happens a lot is that a seller and a buyer will meet halfway. So what that means is, let's say it was $10,000 off. The seller says, I'll come down $5K if you come up $5K. So why, again, going back to the initial question, why would I as a buyer's agent or Bill as a loan officer be trying to see, hey, was this a good appraisal? If it was a good appraisal, hey, rock on. A lot of them are great. So I'm not going to sit there and say that they aren't, because a lot of them are perfect. A lot of them are wonderful. At the same time, it does sometimes happen that an appraisal, it just doesn't make a whole lot of sense. And in those cases, then we need to take a look at it and see if we can come into an alignment on the valuation of the property to protect the buyer's money in that case. Because in most cases, I've never seen a buyer say, hey, Andrew, I don't want the house because it appraised less. I see them trying to figure out, who can I borrow money from? What can I do to try to get this house? So it's from a point of compassion that I approach it, and Bill and I try to work it to the middle in such a case. So I hope that makes a little bit better sense, Tommy. I know it's probably a 7-8 minute answer here on this topic, but it comes up a lot. So I really want to say thank you for asking it.
I have to add, though, I know we've spent a lot of time on this topic, but Andrew, he is saying his buyer's agent, his agent wants to see it. And I mean, his agent is representing his interests. So, I mean, I would think that as long as you have a good relationship going and trust your agent, that it would be fine to show it to them. And you can ask why would you like to see it?
Mm-hmm. And there is an answer right there. So, Tommy, my guess is that it goes back to, depending on the experience level of your agent and the amount of closings they've had over their career, they may be wanting to learn from it.
Yeah. And that, Tommy, just to touch on that real quick, like I mentioned, came in high. Don't send that to make sure your agent is experienced, and does not send that to the listing side.
Yeah, don't tell anybody else about that, Tommy. It's a secret between you and your lender and your agent.
I want the sellers to think that they're leaving money on the table. No
Good
reason.
job to your agent. Good job.
Right. Fantastic. So let me see what else we have going on in the comments here. Drew's Enthused. Yes, sir. Absolutely. I will make the video that Kim and I made about the first time homebuyer pain points available, and the description after the live stream concludes. It was a really fun video that Kim and I did a joint collab, very much on the hip. And she was here and I was like, let's do it. And she's like, okay, let's do it. And then we scripted it and made it. It was a lot of fun.
It was.
Kathy's letting us know she's from Massachusetts. Thank you for joining us this morning or this afternoon, your time, Kathy. It's great that you're here. Mark says, again, wants to say, what's up? I just refinanced and I'm glad to help. Yes, Matt. So you know where my office is, my friend. So whether you want to do a live stream broadcast for that section, or not a live stream, but if you want to go into like a Zoom and do a pre-record, or if you want to come in the office and make it with me in person, whatever your flavor, let's get it done this week and schedule something. That'd be great.
So guys, there's so much I wanted to say when I saw Mark's name, but obviously some things are just not public info, right? We just closed on his refinance. And I wasn't going to mention it because that's Mark's business, but he just brought it up. So Mark is one of our smart clients. Mark listened to my recommendations. We got them all ready. We got everything dialed in, and we were able to catch the market on one of these short down dips. Locked his rate, saved him a bunch of money. He's in a good spot. So again, it's not perfect for everybody, but if you are considering it, like I said, my team and I, we're located in Vegas, but we can handle transactions across the country. So.
Yeah, and I'm glad that you brought that up. I'm glad that you brought that up because a gentleman, and I got to get up with you after and respond to the text and email. Somebody from YouTube had reached out over the weekend. I believe he said they were in New Jersey and they were having some lending difficulties and VA home loan type situation. And the first thing that came to my mind is I need to give him your information, Bill. So if you get a call from a gentleman from New Jersey, just know that it's probably me. Told him to give you a call so that you can try to work that out. So back to what Mark's been doing with that money. Apparently that savings that you got him, he says, I'm gobbling up real estate stocks lately due to the fact they have to pay back so much money to the stockholders and everything is dirt cheap. Okay. I'm sending you positive mojo gojo. Of course, that works out for you, Matt. Investments can always be volatile. So I'm glad that you're making a well-informed decision about what's comfortable to you. Let's see, Kathy. Kathy, you're in here several times, my friend. Thank you so much for being so engaged. Kathy says, you are wonderful, Andrew, and help so much. Thank you. Glad to be of help. Matt says, I smashed the thumbs up button. Thank you, my friend. You are the best. Greatly appreciate your support as another real estate agent and YouTuber. By the way, if you haven't checked out Matt Layton's channel, you can by going to YouTube and typing in the Matt Layton. He's got some really amazing content on his channel, including some brilliant home tour videos as well. Let's see. What else do we have here? Okay. Misarat Binti says, good morning. What's the phone number to call for a question? So Misarat, what I'm trying to do in these live stream formats, and Matt and I did have a little bit of a difficulty last week, to be honest, is I'm putting the live link to the stream itself in the description while we're live. And as a point of verification of making sure only people that are attempting to go live, what I will do to confirm in chat that that's what you want to do. As far as a phone number to call for the ask a question, you can always send me an email and ask your question. And if you want to join us live in the future, just let me know, okay? I hope that's helpful. That's why you're seeing these little tickers. I found the ticker option today in live stream, so you might see a few of them, and I may have already outdone myself because of my exuberance. So if that's the case, I apologize. I have to have a little bit of fun, right?
Mm-hmm.
Drew's Enthused.
Oh.
Let's see what we have. What do we have here? If all goes well, we are closing on our first house this Thursday, locked in at 3.49% a couple weeks ago. Congrats. Yay. Super excited, Drew.
Congratulations. I remember when I bought my first house, Andrew, it was 2001 and the interest rate was 7.125%. And I was turning cartwheels because that was low for those days. That was low.
Well, you know, I did for, I think it was either the 2019 or the 2020 video where I literally went back over the last 50 years of historic interest rates and averaged them out. Do you know that the average 50-year historic rate for mortgages is like 8.43%? And wow. It peaked in like the early 1980s, I believe 1980, 81 at like 19%. So whenever people are like, oh my God, a 5% high, I was like, no, it's very, very low considering the historic average of things. Count our blessings while we have them and appreciate everything in life with an attitude of gratitude, I say. So Drew's Enthused. I've been told that it's best to do bi-monthly payments because you can get an extra payment in, but I'm planning on paying extra each month anyways. Is one better than the other? Bill, thoughts?
No, yeah. From what I've seen and what I always kind of coach my clients to do is just if you can pay extra, make sure that you give yourself some flexibility, right? The biweekly payments are great. That's fine. Pay extra on your monthly if you want to do that. The biweekly really helps a lot because you do have that extra payment that you get, which is awesome. But if you can pay extra, definitely do that when you have the availability. Some people look at switching to like a 20-year or a 15-year term. Andrew and you and I've talked about this before. Great idea. Just in my opinion, you want to stay a little bit more liquid and give yourself some more options and flexibility. I think that, who is it that said that comment, Andrew? That is Drew's Enthused. Yeah, so I think that's fine. Do biweekly payments, make extra payments, totally fine. You'll pay off your loan a lot sooner.
What if you were to do? What if you were to do both? What if you were to do bi-monthly payments and pay a couple of hundred extra a month? Really take it. I mean, it's going to take it down to a 22, 23-year term from a 30-year. Just doing the bi-monthly is what I hear. Is that about right?
Yeah, that's correct. Again, obviously it depends on how much you're paying extra into that, but it's a great idea to pay extra monthly and just stay on that 30-year fixed loan that you got and pay extra when you can.
Good points. Good points. So thank you for that, Sir Hibbler. Let me get you up here, Sir Hibbler. Says, good morning, Andrew and guests. First time catching live. Thank you for catching us live. For reference, my friend, we are going live 9 a.m. Pacific Standard Time, Monday, Wednesday, and Friday. My goal is to have different guests on the show. Bill's going to be with me on both Mondays and Wednesdays just to help us keep track of the lending stuff right from a lender's perspective. And I'm inviting other agents on and other professionals on as well. And of course, anybody in the audience using that description that I put in the link that I put in the description, you can join us live as well once verified. So Terry Grant, he says, I plan on moving to Las Vegas in a year or two. What is the easiest way to do an out-of-state transaction? So glad you brought that up, Terry. And I know a great agent in Vegas that can help.
I know one too.
I don't know who. It could be on the screen right now. But here's the thing, Terry. That's a conversation you and I should probably have offline so I can start giving you some insight. Easiest way in general is to start researching the areas, get set up, get dialed in, get focused on what you're looking for in your new place, and using like my website, andrewfinneyteam.com, to start really narrowing it down and get a better idea of what's out there. I've made several videos about buying a home out of state and how to plan your move. So those are additional resources that may be of interest to you since you're about 2 years out. If you want to locate them on my channel, please feel free. Or if you want to reach out, then I'm happy to email them to you so you have them for quick reference. Mark Baldone. Mark, my friend, you know I love you, but I really got to use the opportunity that you just gave me, Mark. You're telling me I wish I was here in Vegas during the crash. Don't know what the rates were back then, but I know I could have got way more house back then. Two things, and this is why I wanted to pick on this a little bit, Mark. Number one is I bought at that time in 2012. And yes, the rates were good. They were actually, I think I had a smoking low rate back in the day of like 4.375.
Yeah, correct.
That was like a really, really good rate from my understanding back then was a 4.375, 4.5. Correct me if I'm wrong, Bill.
Right.
But it was also a whole different world in terms of debt to income ratios, where I know that you and I both have the VA home loan, Mark. My debt to income ratio max was like 33%. Whereas right now you can go to a back end debt to income ratio up to 50%. So here's why I want to pick on this a little bit is I want to use the opportunity not to beat up on Mark because I love Mark. I really do. He's an awesome guy and a good friend. But it's something that I want to take an opportunity to share with people. Look, when you start thinking, oh, the market's going to collapse tomorrow and life is going to be so much better because home prices are going to be down and everything's going to be cheap. I need you to realize and get real about one thing. If that happens to that catastrophic of effect, are you safe? That's the real question. Are you safe? Let's revisit what hard times really mean. And let's revisit what it really does to an economy. And it's where I really believe in personal accountability, personal responsibility, all that stuff. But we also got to remember where we come from in history. And we got to remember what it was like back then. What was your situation back then? Now, Mark, I know you're a young man. For us that were of a home buying age or should have been in a home buying position back then, What was your financial situation? Could you even qualify? Did you have a job? Did you know what was happening? These are the real things that take into consideration. It's easy to look back and say, I wish I would have bought back then. But it's so easy, apparently, to forget the truth and how difficult the time really was. And that's why I share with this pandemic, we have an opportunity to remember those things that are truly important to us with our friends, our family, and our loved ones. We have an opportunity as a country to come together and say, you know what? No more bickering, no more squabbling. Let's go ahead and own up, take personal accountability and responsibility here. Let's learn to seek to understand each other, accept what we don't, focus on what makes us alike, and approach everybody with love, joy, and hope in our hearts, and be kind to all. Now, that is an overarching ambition that you may not always hear from a real estate agent. I hope you do. At the same time, that's just who I am as a person, and that's what I believe in. And I believe that if we do right by people, it's like my friend Sean Canal over at Think Media likes to say, it's your vibe attracts your tribe. And I love that. I love that saying, your vibe attracts your tribe. And keep that in mind. Keep that in mind.
Andrew.
I'm sorry?
I said amen to that.
Okay. And coming to a church near you. No, I'm just kidding.
Realtor turned evangelistic.
No, realtor turned Tony Robbins. Yes, that would be a stretch, wouldn't it? That would be a lot of fun, though.
You're inspirational for sure. Yeah.
Well, thank you for that, Kim. So let me see. One more question, and then we're going to adjourn. We've been streaming for almost an hour. So thank you for everybody that is still with us. And if you're just joining in, thank you for joining in. I would suggest going back to the beginning of the video if you're just joining in so that you can catch today's hot topic. Keep wanting to say a hot pocket there, so excuse me. But hot topic, which is, what is the CARES Act? And how's that going to impact you with not paying any mortgage payment? And what does that look like exactly? So Sam S says, I had an offer. Oh, I see that you're Navy, Sam S. Thank you for your service. And Sam says, I had an offer of 2.875%. I didn't lock, and the next day it jumped to 3.5%. They allowed me to lock at 3. Are they going to go back down in the next 2 months? Bill, thoughts?
So that is a prime example of why I'm saying if you're in contract to buy a home, freaking lock immediately, because you don't know if that's going to happen, and it could throw your qualifications out. So your question was, sorry, I'm going on my own personal rant there. So you locked at 3. Are they going back down the next 2 months? Maybe. Maybe they might. If you are in contract to close on a purchase or a refinance, and they do drop significantly, I'm talking not the cost of that rate, but the actual interest rate on your loan. If the interest rate on that loan drops close to 0.5 point or more, which crazier things have happened in the last 2 weeks. If that does happen, contact your loan officer and find out if they have a float down option. I know us here at New American Funding, we do. And I did do that this last month when rates did drop, when people were locked in higher. So again, every lender is different. Every day is different. But if it does happen, contact your lender and see if that can happen. Do I see it dropping at 2.5? I don't think so. Dropping that low, 3% is a very, very good rate.
Very good.
It is. I'm a little bit jealous, to be honest, Sam. Even my loan officer, I think he might be on the screen with me, didn't even hook me up with a 3% rate. So, Bill, I want a 3% rate now. No, I'm just kidding. I don't want to touch it. I don't. You know my position on refis. I don't mess with it unless it absolutely makes sense. I don't mess with it. That said, thank you for the great question, Mark. I see you right there, my friend. Let's go ahead and pivot back to you real quick. Mark says, and this is another important context to make. If it'll decide to come up on the screen here. Mark says, see, it's different for me because I'm active duty and we get paid no matter what. I forget that I'm like the 1% that is guaranteed a check. And that's a great point. It's very easy for us to forget whenever we're in our own bubble, and as people, we're always in our own head. We're in our own life. And that's what we see. You got to remember that we got all these other bubbles out there. And all these other bubbles are people with their own story, with their own situation that makes it unique. And it's important to take and have that open-mindedness and open eyes to say, hey, you know what, just because this is how my life is, theirs is different. They're hurting. How do you think the people in the hospitality and restaurant industries right now are feeling during this pandemic? Whereas there's some of us in the country that could easily ride out 3 to 6 months if we have to ride out without a concern of how we're going to pay our bills, or we're still able to work. So it's important to come together as people. And again, that's where I believe the opportunity exists. So Adnan Ali, you say hello. Sam S says, thank you. You're both very welcome. To bring it to a close, Kim, I do want to share with everybody that you are in Nashville, Tennessee.
I am.
And let's go ahead and put up your wonderful mug on your website once it decides to pop up. There she is. So anyone that is in Nashville, Tennessee, I want to plug Miss Kim. She is a great lady, a wonderful person. And if you want to get to know her better, I've already put her link to her website right here in the show description so that you can reach out to her directly. Kim, I believe it's always good to end with some positive mojo. So let me ask, what positive mojo do you want to share with us today to end our live stream broadcast?
Well, wow, okay. I haven't thought about this, but I would say yesterday I was really touched when I was watching the governor of New York, Cuomo, talk about, this is not, it's not just fighting the virus, it's also fighting the fear. And we spoke several times today about the recession, which I feel like went from the fall of 2008, at least in my market, it began the fall of 2008 and went through probably about 2013 before things started picking up. And there were a lot of unknown, uncertain times, just like we're experiencing now. So just keep in mind to make an informed decision if you're going to be purchasing a house or selling a house or doing anything real estate related. Just make the best informed decision that you can. And always, as Andrew says, reach out to your trusted real estate advisor and your trusted loan officer to look further into it to see if it is the right time for you. And to, I can't remember whose comment that was about, I wish that I had bought in 2012 in Vegas.
Oh, it's my buddy Mark. And Mark knows I love him, so that's why I'm picking on him a little bit, because Mark is like this. He's my boy over here in Vegas. He and I met. He's just a wonderful guy. So I know he's a very smart young man, and I greatly appreciate all the families that I represent. But Mark's got a great sense of humor along with it, so I'm pick on him a little bit.
Well,
it's all in
just
brotherly love.
Like, there are a lot of people that say that they look back and they say, I wish that I had, but it was a scary, uncertain time, just like today. So again, just do the best you can and don't let fear rule you, but also let it be somewhat of a guide. If your gut is telling you, hey, I'm not sure or certain if this is the right time, then look at that budget and see. Now, I do have a closing this week with a young woman, first-time home buyer, who is a server and has been employed with the same restaurant for the last 10 years. So she's got great job security, but that restaurant has been closed. And lenders, Bill, as you know, I don't know if this is happening with your investors on the loans that you provide, but my preferred lender, Mike Smalling at F&M Bank, has told me yesterday that they're going to have to do a verification of employment on client. The day of closing, they will call her employer and make sure that she is still employed there. The good news, however, is they're not asking for a pay stub over the last 2 weeks, because if they had, then they aren't going to see much. But she's not nervous because she has planned, you guys. She has money saved up. And so she's moving forward. Yes, there's a little uncertainty there, but she has worked hard at saving money and preparing for this moment of purchasing her first home. So she's got reserves.
That's fantastic to hear, and I certainly appreciate that. I do have to give one more plug before we're out, because I see that Kate Barnes, Realtor, which she is another YouTuber and great agent out of the San Francisco Bay Area. Kate, just to give everybody a shout, I got an agent in Dallas, Marlene Luviano. She'll be on Wednesday with Bill and I as we're talking about mortgage rates blowing up. Right, Bill? So he's going to give us the down low on why. But Miss Kate, Barnes, the realtor in San Francisco, will be live with us on Friday. We're looking forward to that, Kate. And I love your comment. And it's, again, about your vibe attracts your tribe, as my friend Sean Canal likes to say. Gotta reference his name. He's like, you can't make a referencing the source of that quote, right? So I don't know if he came up with it or not, but that's where I remember it from. So when I think your vibe, hashtag your vibe attracts your tribe, it's beautiful. And I know that Sean's the one that I learned that from. All the same, everybody, thank you for being here. Check back in with us on Wednesday at 9 a.m. Pacific Standard Time when Bill's talking about why those mortgage rates are blowing up with Marlene Luviano out of Dallas, Texas. Kim, thank you so much for joining us today. Wishing everybody a great and productive day.